Hello and welcome to the CFO Weekly Newsletter. Thank you so much for joining me. Well, the talk of the town has been GameStop, should I say, and also AMC. No doubt about it. Everyone's talking about it. And here's an example of a retail trader who turned $53,366 into over 22 million. How good is that? This particular strategy, I've shown you guys, if you've been listening to me for any time, I've shown you guys this strategy for about the last month, right? I've been showing you guys exactly how you would find opportunities like this. In fact, like I said last week when I spoke about this particular stock, is that we found this back here on Friday, right here on Friday after it broke out. So we found it right here. We told our members about this in a 2-day workshop that we run for our members, and one of the strategies we discussed was a high short interest strategy. We said this has very high short interest, over 100%. Over 100% of the available stock float is shorted. Now, I think it's a little crazy to get over 100%, but you can do that. You can short more than the actual amount of shares that there are floated, which is pretty crazy. This one is well over 100%. In fact, I've probably got it here. Here it is, 121 right now, almost 122. I think at one point it was about 150. So 150% of the available stock that's been floated was shorted. My goodness me, anything above 100 is ridiculous. Anything above 30 is quite a lot. So, we've demonstrated this to our members back here when the stock broke out at 65. And when I spoke about it last week with all of you here, it was 147. So, if you did get into this stock, one of my members that's listening from last weekend, someone who was in the newsletter, if you got in when I spoke about it at 147, or better yet, when I demonstrated it to my members at 65, let me know. Some of our members are saying, Sean, would you do anything with it now? Probably not. The reason being that the option spreads are so wide, right? It's just ridiculous. The difference between the bid and the ask is just incredible. Even on the stock price itself, there's certain restrictions. I probably would just leave this alone for now. Could it be a long-term bearish trade? Yeah, probably. They'll probably eventually drive it back down. But for me personally, I'm not touching it right now. So yeah, been a lot of talk there, but yeah, this is something that we actually did show our members, and pretty incredible with what's happened there. But again, this is something that we've been teaching for a very long time. BYND was another one that we found as well, as it broke out of this bull flag again, had a breakout and a huge move higher. That was another great trade as well. But there's always opportunities like this. When you're getting a stock that's severely shorted, well over 30% is a good benchmark, and to be able to find opportunities like that is obviously pretty amazing. Now, there are ways of doing it. Sean, people are asking me, is there anything I can do right now? Well, right now the market just entered into a bearish opening range, so probably not the greatest time to be utilizing the strategy like as of now. However, if you were desperate to see if you could find something utilizing that same strategy, just because it's the talk of the town right now, for me, optionable and shortable, right? FinViz, free screener. Let me just show you guys one way of doing it. Change since open up would be ideal. The minimum would be 300,000 as a average volume. I would prefer it to be 500,000, but minimum 300,000. Short float, I'd ideally like that to be over 30%. Okay, stocks that are under 10 normally are not shortable, so over 10 would be the way to do that. And that sort of brings us down to 7, right? So it doesn't take long to go through those. Workhorse is one that we've made money from in the past. That looks okay. UTZ, it's okay. That one's interesting. It's in solar as well, something that could do well this year. So SPWR, that would be interesting. PLCE is another one, right? ION, not so much. I want them to be all-time highs, new highs, or gapping up. would be what I'm looking for there when I'm looking at the chart. AMCX, not so much. So, SPWR would be one. Obviously it's already had a pretty significant short squeeze. It was up over 2% when the market was down pretty significantly on Friday. Short float over 57%. Short ratio, which is how many days it would take of average daily volume to buy back all of the short stock. So 5, that's okay. I prefer it to be closer to 7 or more. But that's pretty good, right? It's already obviously moving higher there. It could have another significant move, and the fact that it was moving up while the markets were doing, look at this workspace here. Well, the markets were doing this, right? Down 1.5%, 2%, almost 2%, 2.5%, right? All of the major indexes below the 21 EMA now. And then you're getting a stock like this high short interest trade here, SPWR, that is having a 2% move to the upside. Bit of an indecision candle there, but you could look at this as a bit of a bull flag, right? You could. I'm focusing on good bearish ideas right now, but just because of that opening range. But it could certainly be something that you potentially look at here as a high short interest trade that's now potentially breaking out of a bull flag. Okay. Interesting, right? A move above here would be ideal. If it could get above this pivot here, get above that high of 57.52, that may be something that you could look to buy delta 60, delta 70 call options out, for a couple of months and see how that one plays out. So, that's another one. And PLCE, I think, was that the other one? Yeah, this was another one there. Same sort of thing. Nice move up and then some sideways consolidation, up over 3% when the market was down overall. If we look at the index and sector that it belonged to, so the industry that it belonged to, apparel stores, was actually down, and so was consumer cyclical, the sector that it belonged to, and that was up over 3%, almost 3.5%, again, due to being short squeeze. So, there are a couple of potential ideas if you really wanted to look at something, okay? But anyway, so that's what's going on there. But this sort of thing I've seen many times. I've seen Tesla go from 500 to 900 as a result of a short squeeze. I've seen this many. I've been teaching this strategy for years. But the difference between this one and all the other ones is the fact, obviously, that the retail trader was destroying the hedge funds. There were some hedge funds that had to actually be bailed out. There were certain hedge funds that lost billions of dollars. Other hedge funds bailed out other hedge funds just to keep them in business. So yeah, and a lot of these hedge funds do this, these institutions, where they will find a stock that is been performing poorly, and they will start to analyst downgrades. They'll start to put news out to really downgrade the stock and drive it down and make a fortune off it. The difference here is that the retail traders got together and they hurt the hedge funds, right? The institutions, just the other way around. So the smaller traders hurting the big traders, which is normally the other way around. So that's really why this is such hot news. And obviously people doing stuff like this is pretty incredible as well. I mean, there's nowhere else you could make that sort of money, is there, other than the options or the stock market. So pretty incredible. But anyway, back to the overall market. Let's have a bit of a look. Now, I did speak last week about keeping a very close eye on the opening range. Okay, the SPX is the best gauge of the overall stock market, and we use our over 90% accurate opening range. We can see that's now broken to the bearish side, sitting right on the 50. So this is now confirmed bearish. So the opening range, the overall market, is now confirmed bearish using this 90% plus accurate indicator. However, it is sitting on the 50, so we may get a bounce off the 50-day simple moving average and go back into neutral or positive territory, so keep an eye on that. But if we do have another day where we close on or near its low below the 50, that could signal a sign for this market to move lower. A couple of significant things that are happening this week that you want to keep an eye on. The jobless claims on Thursday, the employment situation on Friday, they will be very important to where the market does move this week. So we want to keep a close eye on that. As far as earnings, the mega company, Amazon, will be reporting their earnings. That's certainly going to have an impact as well. That's after them, or right on the market close tomorrow. Okay, so you want to keep a bit of an eye on that as well. Um, the the big these couple of big companies here, I'll just show you these, like Apple. Obviously this is starting to pull back, broke below the 21. If that gets below the 50, that's a big sign. Obviously a huge company has a big impact on the overall market. A heavily shorted stock is Tesla. That's now broken the 21. Okay, now it's had that move up to 900. It had a bull flag here, but it failed. As soon as you would have been stopped out right there if you got into that. So now that it's actually broken down or closed below the 21, if it doesn't recapture that in today's session, we could see this move down to 700 in a heartbeat. Right? But we'll keep an eye on that. I wouldn't want to be touching Tesla until to the upside unless it broke above 900. Okay, so right now, no trade there at all. Bit of a double top there, if anything, bit of an M pattern. Yeah, so Apple and Tesla looking a bit weak as well. Another large company obviously would be Facebook. That doesn't look particularly strong. That's below the 21 and the 50. There's a few warning signs there, right? Now, if we look at high yield bonds and junk bonds, which typically are a forerunner for the stock market, where they move, the market tends to move. You can see high yield bonds has broken below its 21 for the first time in a while. Okay, if it breaks below the 50, that's going to be significant. Keep an eye on that. Also with junk bonds as well, same thing. If it's broken below the 21, if it breaks below the 50, watch for the markets to move lower. Now, the great thing that we love about using options as opposed to stocks, futures, or forex is that there are no dark pools. Now, a dark pool is private exchanges where these large traders, institutions, hide their transactions from the public. In the options market, there are no dark pools. Okay, so we're able to see every trade that goes across the tape. So if I looked at high yield bonds, for example, and I looked at the monthly expiry, which is the 19th of March, next month's monthly expiry, if I have a look at this and I look at high yield bonds and I look here on the put side, I can see an enormous amount of put options here. Incredible amount, right? 89,000, 131, 200, 148, 136, 142, 127, 95,000. That is pretty significant. So what is this saying, Sean? Well, high yield bonds, like we say, is a forerunner for the stock market, right? Where that moves, the high yield bonds move, the market tends to move as well. This is what I saw happening when the market dropped 35% on news of the coronavirus. These are some of the things that I saw. Opening range, bearish. Okay, breaking the 50 is a big thing, but opening range, bearish. All of the sudden, I saw huge amounts of put options being bought in high yield bonds. Starting to see that again. I just told you about the skew, which is a perceived risk of a 2 standard deviation move or more to the downside. In other words, the smart money expecting the market to crash. So these are some warning signs here. There are some significant warning signs for sure. So we need to keep an eye on this. Now, obviously, Amazon has been pretty immune to the whole pandemic, and surely their earnings would be spectacular, you would think. So that may have a positive impact on the market. But there are some big warning signs here, right? Just be aware of that this market could come down and could come down in a heartbeat. Overall, overseas market, should I say, Asia, nothing significant there. The European markets haven't opened yet, so we'll keep an eye on that. And don't forget Amazon earnings, that will be a big one, and the employment reports coming out towards the end of the week. So we want to keep a very close eye on those things. Now, the VIX as well, which is the fear gauge of the market. If we have a look at that, that's been above 30 for quite a while now. The last few days, at least the last sort of 4 days above 30. That's another warning sign. Okay. So we want to keep a bit of a close eye on these things. I mean, the other thing that I look at and I've talked to you guys about is the fact that all of the major indexes now are below their 21 EMA, right? So we've got the S&P 500, the Nasdaq, the Russell, the Dow Jones Industrials, and the transports all below their 21 EMA for the first time in a while. All of them in unison, all of them doing the same thing. That's a bit of a concern. Okay. Now, if we look at the sectors, let's have a bit of a look at the sectors in relation to the 21 EMA. I'm just going to put them back to a daily chart. So let's have a look at the various sectors right now. Biotech's still okay, holding its 21. Certainly due to the vaccines sort of been helping that sector for sure. Financials not doing well. Banks are not faring well at all. Now, finally, we're starting to see the largest sector, technology, starting to break down. Healthcare breaking down. Consumer discretionary, consumer staples, energy, retail doing very well. The online shopping has been exploding. Okay, and that's sort of where we're at right now. I mean, the utilities right now sort of fairly flat. But for me, as far as potential ideas making money right now, well, I'll show you one that we're in. I spoke to you guys about this for the last couple of weeks. This was one, Honeywell, right? We were looking to make money with this to the downside. Okay, it had closed below the 50-day moving average, and the 21 was below the 50. We had a gap to come down and fill. We almost hit that. We were down $7 on Friday. We're up 30% on this with put options, bearish trade. We're up 30% on this in just 2 weeks. So this one has been a great trade for us. Another one that we've done very well, and we're out of this now, but we did awesome with China. FXI, the ETF that tracks China, huge move up here. We made 65% in just a couple of weeks on that one. Obviously, we exited here, so that was a good move, and we did very well with that one also. Now, as far as something that I would potentially look at now, probably silver. Okay, haven't looked at silver for a long time, but a bit of almost a triple bottom there, right on the 50-day simple moving average support level. Having a move up there over 1%. There is talk that a lot of people are banding together retail traders again to try and cause silver to move much higher as well. But I do like silver for a whole variety of reasons. I think silver is near its 100-year lows. When I'm talking about it on a relative basis to equities. So there is a bit of a resurgence in inflation as well. If you have a look at the World Food Index, you can see, as just an example, that has certainly been moving higher. The cost of food has been going up along with many other things. So a bit of a resurgence in inflation. I think silver could do well. So I'm looking to take a long-term position in this out until 2023. But there is a bit of a fear right now of a market bubble, and the market's showing some big warning signs right now. Okay, and I've spoken to you about those. We've broken below the opening range, bearish right now. We're watching the 50-day simple moving average like a hawk. Is it going to bounce from here, or is it going to remain in this bearish opening range? We've got high yield bonds and junk bonds sitting right on their 50. If they break, that's a big warning sign. Okay, so write these things down. We know that there's massive amounts of put options being bought in the high yield bonds, certainly in February and in March, but particularly in March, the monthly expiration in March. That's another warning sign. The VIX remaining above. Let me just find that for you. Remaining above 30, that's another warning sign. Okay, so there's a whole range of warning signs here that could see this market move down dramatically. What are you actually doing, Sean? Well, prior to this, I actually set up, last week, we set up a straddle. Okay, I was looking for the market to have a significant move. There were a whole range of factors here that could see this market move down. So we could have just bought puts, or we could have done a straddle. Now our straddle, where we bought calls and puts at the same time all the way out to May, we are up 11.38% on that. Okay, so we're up 11%. The members that just did the put options, they're up over 50.7% in a week with the QQQ put options. I spoke about this last week, an inside day here, where this candle was inside the range of this candle. That normally results in a bearish reversal. So I actually called this, and a lot of people thanking me for that and making a lot of money from that. The other thing that we're in long term is agricultural ETF here, and this one is still working nicely. We've still got a nice profit on this, and we're continuing to hold. So there's some of the areas that I'm looking at right now, some of the things that I'm seeing overall in the markets, but they're the things you need to look out for. Opening range is already bearish. Massive amounts of put options in high yield bonds. Are we going to break on the high yield bonds and the junk bonds the 50-day moving average? Keep a very close eye on that. What's going to be the employment results on Friday in particular? What's going to be happening there? Is Apple and Tesla, which are a huge part of the market, are they going to continue to move down? If they do, that's a big warning sign as well. Is the VIX still staying above 30, right? These are the types of things that you need to be looking for. We've already positioned ourselves. So if the market continues to fall, we're just going to continue to make money. We've made over 11% return already in the last week. You've got to be positioned for what's about to happen. The smart money, there's a huge amount of smart money in the bond market that dwarfs the stock market. We're looking at what they are thinking right now. They are very bearish. When they are concerned, you should be concerned also. So I am setting up positions that will make me a huge amount of money if the market does have a large fall. However, I'm not in the business of trying to predict or think that I know everything, because no one knows what's going to happen next, right? As much as these so-called experts believe they do. So what we want to be able to do is set something up. If it has an explosive move to the upside, we make a huge amount of money. If it has a crash, we make a huge amount of money, and that's exactly what we've done. And we're making money with stocks like HON to the downside, FXI to the upside, as examples. So that's the way you've got to trade this market, looking for individual setups, looking for specific ideas that can make you money. And for me right now, that's what we're doing. The new position I'm taking is in silver long term, and I am waiting right now to see whether this market continues to move down. So that's what I'm looking for right now. I hope you found that useful. Some really concrete criteria for you to watch this week. Let's see how this market unfolds this week. A particularly interesting week this week. So let me know your results on any of those ideas that I just sent through to you, and any of your feedback. I appreciate your feedback so far. I'll talk to you all again next week. All the best, and my name's Sean Allison, and bye for now.